Welcome everyone. We're going to get right into the stock charts. And this channel is all about technical analysis. So we're using indicators to tell us where charts are likely to head in the future. Nothing's guaranteed. It's all about just putting the probabilities in your favor and then managing your trade and managing your risk. Okay, so you always want to take trades with good risk-reward ratios. You want to take trades where the probability and the leading technical indicators are going to tell you you have a higher probability of being right versus wrong. And that's what this channel is about. So I'm going to go through general market analysis, and then I'll look at some individual trade ideas. I want to point out a couple things. The ag commodities are rallying today. We're getting kind of a pretty strong bid in those. And so I want to talk about, what the potential is that I see going on in the markets here in the near future, all right, and how the Fed's going to play it. Because again, this market, if you think about it, is really all about the Fed. The market only cares about cheap and easy money forever. Any change to that will change the dynamic of the market, okay? So we're going to start out here with the triple Qs. Again, if you guys are new, check out my course, link in the description below. It's a $99 course, but it's about 5 or 6 hours of video trainings. It's going to give you really good education on the skill set needed to use technical analysis to find trade ideas and manage risk. All right, leave me a thumbs up as well. I do appreciate that. All right, guys, triple Qs, no change today. You can see here we're basically flat, 0.1% down. Just in general flat. So again, on the hourly chart, just to give you guys an update, we have a bearish rising wedge right here. I can kind of mark that out if you want. I'll just mark that in like we'll go with this, dark purple maybe. There's your bearish rising wedge on the hourly. And we continue to just grind higher within the wedge. All right, so no change there. We do have slight negative divergence on the hourly, but on the daily, the negative divergence has been building for quite some time. As you can see, the momentum's just been trending down. Each new high in price has been lower in momentum on the RSI and the PPO. So divergent high, sell off, divergent high, sell off, divergent high. What happens next? Well, I think it's likely we sell off. That's happened the last pretty much each new divergent high that we get, we have a sell-off. This sell-off here was a move, that was a drop of about 12%. This one was not quite as much, about 7.5%. So again, we have to see what happens next, but I think it's likely, the probability says that we have a sell-off. All right. Again, what I'm looking for back to the hourly is a bearish break to the downside of the lower support line on this bearish rising wedge on this hourly chart. Okay, that's your next sell signal. I don't see anything yet telling me to sell, so I'm flat. I'm not long, not short the Qs, just kind of flat this one. Moving on to the SPY, you can see on the daily we have this trend line coming off the March 2020 lows, just been uptrending. We got a sell signal or a break of trend right here, and then we've just been back testing. Look at the candles though recently over the last couple of days. Yeah, they're moving it higher, but it's just grinding higher on really small. It's compression, basically price compression, where we're not moving in big ranges. It's just barely grinding higher, and we're moving higher on negative divergence. So the RSI and the PPO continue to diverge lower. Momentum's moving lower while price is grinding higher but compressing. Looks like we're set up for a bigger move, so I don't know what's going to happen. Maybe we gap up, hit this trend line, and then sell off. All right, that's a potential. Again, I don't know what's going to happen. All I know is that we're below trend. We have negative divergence, and the probability tells me that any day now, we're going to get an impulsive rejection or reversal candle. So we're just waiting for that. We're waiting for that signal that the selling has now started. We don't have it yet, so until we see it, we're going to likely just continue to kind of grind higher. And IWM has really gone nowhere since March. It's basically just flat, right? So we've just been moving down, up, down, up, down, up, just grinding around, going nowhere. So in terms of momentum, the momentum stalled out. All right, it's flat. Hasn't been going down, but it's really not going up anymore. And this is the momentum off the March 2020 lows. Here's your trend that we created. and we had a sell signal or a break of trend right here. We made that sell signal with negative divergence, telling you that, that this momentum, this upward momentum is about to change. And we now have a break in trend, and we've really been going sideways since. So I think it's likely we're going to continue lower after we get out of this sideways trading action. I want to flip over to the ag commodities. So we're looking at DBA. This is a agricultural fund that basically is 10 or 12 different agricultural commodities, and well, just not all agricultural, but multiple commodities. I think oil's in there, and I'll have to look actually what's in there. Okay, I did a quick look up on Yahoo Finance. You can see in DBA you've got corn, soybean, sugar, coffee, T-bills, cocoa. So it is pretty much ag commodities, right? But here's the thing. These ag commodities are rallying today. So if you look at the bigger picture on ag commodities, and this gets to the bigger picture of what I want to talk about with the Fed, you have a downtrend line. This is your downward trend, right, in ag commodities. They've been basically dropping in this latest downward channel since about, really about 2014 or so. And really, you could probably even move that back. But the channel is really clean right in here. They've been moving down for a while. And so they were in a bearish trend. However, we have a change in character. And this is a weekly chart. So this is bigger picture. We recently had a big breakout of that downward channel. So the trend has reversed. We're no longer in a downward channel. I think we're in a bull market or an upward price channel in these ag commodities. And as I zoom in on the daily, you can see here, again, the bottom was really marked with bullish divergence. So here's the lows. We put in bullish divergence down here, signaling the bottom was likely in. And we've been rallying ever since. Now we've created the support line. You can see here, held support through here. And today, we're basically at support and just impulsive move right off that support. So again, continues to look bullish, these ag commodities. And you can see here also on the daily, now we did start to put in lower highs and lower lows just recently, but momentum, there was no divergence. You can see here, we just continued we made a lower high in price and we made a lower high in momentum. So it just signals a correction, not necessarily a trend reversal, but just a correction in a bullish trend. And we had that correction, fell down, we fell down to support, really falling about 8-9%, and the buyers stepped right in where they should. So we continue to, hold support, hold a bullish trend in these ag commodities. And in general, I'm bullish these things across the board. Now, what does that mean? Prices are continuing to rise in these agricultural inputs, which should affect they should continue to affect the, consumer prices and the inflation reading. And as inflation continues to move higher, then it's going to put more and more pressure on the Fed to actually act and do something. The thing is, the Fed wants to talk inflation down. So that their last meeting, they came out and said, we might raise interest rates a little bit sooner, 0.5% in 2023. And they basically got a correction in the ag commodities and in gold just by talking about potential to raise interest rates without actually doing anything. I think the Fed wants to try to control inflation through talking about raising interest rates, but they don't actually want to raise interest rates. Raising interest rates causes problems in the asset structure. So the thing is if these commodities continue to rally, talking's not going to be enough. They will actually have to take action to control the inflation. Now, they may choose not to. They may not actually take action and raise interest rates, but it's going to put pressure on them to really tell the world what they're choosing to do, whether that's control inflation or continue to prop asset markets up. So that's, I don't know which way they'll play it. I really don't know if they're going to raise interest rates or not. But understand that if they start to raise interest rates, the asset structure, market prices, technology, all these stocks are likely going to come down quite a bit. If they do not raise interest rates and allow inflation to run and continue to run and talk about how it's just transitory even though the prices continue to go up, then you should see the inflation hedges continue to rip higher and do really well. So that'll be things like gold and ag commodities. Here's a new trade idea. Now this one's just a setup, not an actual, it's not actionable yet. I just want to point out the setup, and we'll follow along to see if we actually get a sell signal or a trigger. GM, General Motors. So on this one daily chart, you can see we have this upward price channel in GM. Recently, we've kind of stalled out and really started to kind of go sideways basically, but we have trendline support right down here. Just been lots of reactions along that trendline support. And you can see recently we're pretty much right on trendline support right now. So this is where the buyers should be at. You should expect that the buyers will step in right here. But one thing to note, big negative divergence on the PPO and the RSI. Look at the momentum just dropping off there on the PPO, and the RSI is, continuing to be negative divergence as well. So that indicates to me that this is going to break. It doesn't have to break right now. We can continue for a couple days, maybe grind higher, maybe even put a new high, but going to break soon. So I think we're likely, due to break trend, somewhere in this time frame. We have to just wait for that sell signal. So what is that sell signal? That's an impulsive break of trendline support. So it'd be something where you see a big, a gap down and maybe you sell down, or a intraday breakdown candle, something breaking that trendline support that's impulsive. Not just a bear, not a close right below it, but you want to see an impulsive breakdown where you're well below that trend line. If we get that, I see a level of support right here sitting at about 54.66, but a good level of support is right here about 46.77. And that would be my target for this trade. That level of support comes all the way back to 2017. You can see that was major resistance. And then again, it was resistance right here in November of 2020. We held that resistance. Finally, when you broke above it, it was pretty impulsive. You kind of broke above and ramped higher. So I think if we do break, we're going to head right down to that and likely going to get a reaction, or that could be the bottom there. That would be a drop from where we're at of, about 20%. So depending on when or if we get that sell signal, it could be a bigger drop. That's just a trade idea. We'll just watch this one, wait for, some sort of a sell signal. If I see something show up, I'll point it out in a video. But, let's keep that one on watch for right now. And CAR, Avis Budget Group. So this one's right at trendline support. You can see on the daily, we have an uptrend line coming off the March 2020 lows. Clear uptrend right there. We're right there. We've been testing support for the last 3 days. We tested it here, here, and here. So far it's held. We have not broken, but look at the negative divergence on the RSI and the PPO. Clear negative divergence. So we have a divergent high. This was a divergent high, right? Let me go ahead and mark it out. That was a divergent high. This, and then all this was pretty much divergent high as well. So divergence, negative divergence, uptrend line, testing support. We're looking for a sell signal or a break of the trend line to give us that sell signal. If we break, then we're likely heading down. I think we'll likely head down to this 51.12. I see that as a pretty clear level of support. So I think we'll likely just move, down there. And that would be a drop of 30% or so. Not going to happen all at once, but I do think we would, the trade would be to work our way down to that target, down around the 50, 51, 50 area. Okay, so there's another trade idea, not actionable. I'm not short this. I'm waiting for a sell signal, but it's a setup. And, if it triggers anytime soon, I'll let you guys know on the channel. That's really all I got for today. There's just not a whole lot of other updates or changes in the posture of a lot of these charts. Just more grinding along, slow summer trading. So trying to find some ideas here and there, point them out. Let me know what you guys think. Leave a comment below. Leave me a thumbs up and check out the course if you haven't done so already. Catch you guys on the next one.